Have you ever wondered how a single financial scheme could reshape an entire nation's economy, and then bring it crashing down? The Mississippi Bubble is one of history's most dramatic examples of speculative frenzy. It combined incredible promises of wealth, innovative financial instruments, and the allure of uncharted territories to create a bubble that captivated France and eventually devastated it. At the heart of this story is John Law, a Scottish economist and gambler who revolutionized how money worked in France. His bold vision introduced paper currency, merged debt with opportunity, and offered ordinary people a chance to buy into the dream of endless prosperity through the Mississippi Company. But what seemed like a genius plan to solve France's crippling debt and create untold fortunes quickly turned into chaos. Fortunes were made and lost overnight, and this event gave rise to the very term millionaire. In this video, we'll dive deep into the rise and fall of the Mississippi Bubble, uncovering lessons about risk, speculation, and the dangers of unchecked optimism. By the end, you'll understand how these historical events still resonate in modern financial markets. To truly understand the Mississippi Bubble, we need to explore the dire financial state of France in the early 18th century. After years of war under King Louis XIV, the nation was drowning in debt. Public trust in the government's financial system was at an all-time low. Gold and silver, the backbone of currency, were in short supply, and the economy was stagnating. Enter John Law, a man with an ambitious vision. Law believed that the key to economic recovery lay in replacing metallic currency with paper money, an idea revolutionary for its time. In 1716, he convinced the French regent to establish the Banque Royale, a central bank authorized to issue paper currency. But Law didn't stop there. He proposed a bold solution to France's debt crisis, merging the government's obligations with a business venture that promised untold profits. This came in the form of the Mississippi Company, which held a monopoly on trade in the Louisiana Territory, a vast and largely unexplored region in North America. The idea was simple yet ingenious. Citizens could exchange their nearly worthless government bonds for shares in the Mississippi Company. In return, they would gain ownership in a venture that promised immense wealth from the resources and trade in Louisiana. The promise was irresistible. Investors flocked to buy shares, lured by visions of endless riches. The Mississippi Company soon became the talk of Europe, sparking a speculative frenzy. But this optimism was built on shaky foundations, as we'll explore in the next chapter. With the Mississippi Company established and its shares publicly traded, a speculative mania began to grip France. The allure of untapped riches in the Louisiana Territory, bolstered by John Law's brilliant marketing, created an almost magical sense of opportunity. Investors believed this was their golden ticket, and the stock prices began to soar. What fueled this frenzy? A combination of clever financial engineering and rampant optimism. Law's Banque Royale played a pivotal role by providing liquidity. Investors could use shares of the Mississippi Company as collateral to borrow money, which they often reinvested into buying even more shares. This cycle of borrowing and reinvesting created a self-reinforcing loop, driving the stock price higher and higher. At its peak, the Mississippi Company's share price skyrocketed from an initial 500 livres to an astonishing 10,000 livres. Overnight, ordinary citizens became millionaires, a term that gained popularity during this very bubble. The streets of Paris were filled with stories of newfound wealth, extravagant spending, and rags-to-riches transformations. Foreign investors from England, the Netherlands, and other parts of Europe also poured their money into the frenzy, further inflating the bubble. The company became a symbol of France's economic resurgence and offered a glimpse of what seemed like an unstoppable financial revolution. However, beneath this surface of euphoria lay significant cracks. The Louisiana Territory, though vast, was largely unexplored and undeveloped. Its economic potential was grossly exaggerated to sustain the hype. Promises of abundant gold, fertile lands, and thriving trade routes were more fiction than fact. Moreover, the Banque Royale's continuous issuance of paper money began to destabilize the economy. As Law printed more banknotes to feed the speculative appetite, the value of the currency began to erode. Prices for everyday goods surged, and whispers of inflation started to spread. Even as these warning signs emerged, the public remained captivated by the bubble. People sold their homes, businesses, and even family heirlooms to invest in what they believed was a once-in-a-lifetime opportunity. In the next chapter, we'll uncover how this speculative euphoria unraveled, bringing the French economy to its knees. The Mississippi Bubble, like all speculative manias, was destined to burst. By late 1720, the first cracks began to appear. Investors who had climbed to unimaginable wealth started to sense instability in the system. Many decided to cash in their gains, selling their Mississippi Company shares at their peak value. The problem? There wasn't enough real wealth to back the inflated stock prices or the paper money issued by the Banque Royale. When a few major investors began liquidating their holdings, panic spread like wildfire. Share prices, once the talk of Europe, plummeted as everyone scrambled to sell. This wasn't just a financial collapse, it was a psychological one. The dream of boundless riches vanished almost overnight. People who had once been millionaires found themselves destitute, their fortunes evaporating into thin air. The streets of Paris, once filled with stories of newfound wealth, were now flooded with despair and anger. Adding to the chaos was the failure of John Law's monetary experiment. The Banque Royale had issued such a vast amount of paper money that inflation spiraled out of control. Prices for goods soared, and the value of the currency crumbled. When people tried to exchange their banknotes for gold or silver, they were met with shocking news: the royal treasury had no reserves left. To maintain control, the French government issued decrees restricting the use of precious metals and banning their hoarding. But these measures only deepened public distrust. Citizens began to see the Banque Royale and the Mississippi Company not as symbols of progress but as instruments of deceit. The collapse wasn't just financial, it was societal. Riots broke out, and mobs targeted the homes of wealthy investors and officials involved in the scheme. John Law, once hailed as a financial genius, became a symbol of ruin. He fled France in disgrace, leaving behind a trail of economic devastation. What's fascinating is how the bubble's collapse rippled across Europe. It served as a cautionary tale for other nations, most notably England, which was experiencing its own speculative frenzy with the South Sea bubble. The two events were eerily similar, showing the dangers of unchecked speculation and overly ambitious financial experiments. But what lessons can we learn from this infamous episode? The Mississippi bubble teaches us the importance of skepticism in the face of economic euphoria. It reminds us to question the sustainability of rapid wealth accumulation and to understand the true value behind investments. As we transition to the final chapter, we'll discuss the long-term effects of the Mississippi bubble on France and the timeless lessons it offers for today's investors. The Mississippi bubble left France in a state of economic and social turmoil. The collapse didn't just wipe out individual fortunes, it undermined trust in the government, the banking system, and financial innovation. The French monarchy, already struggling with its debt, found itself in an even more precarious position, setting the stage for the political unrest that would erupt decades later in the French Revolution. One lasting consequence was the skepticism toward paper money and speculative ventures in France. For years, the French public viewed financial markets with suspicion, hesitant to trust new economic ideas. This hesitance arguably contributed to France lagging behind England in industrial and financial innovation throughout the 18th and 19th centuries. However, the Mississippi bubble also provided invaluable lessons about the dangers of speculative manias. It highlighted the risks of overvaluing assets based on hype rather than intrinsic value and underscored the importance of transparency in financial systems. These lessons remain as relevant today as they were in the 18th century. For modern investors, the Mississippi bubble serves as a cautionary tale. It reminds us to avoid chasing trends blindly. Just because an investment is popular doesn't mean it's sound. Conduct thorough research and focus on fundamentals. Be wary of over-leveraging. Borrowing to invest can amplify losses as much as gains. Recognize the signs of a bubble: rapid price increases, widespread speculation, and promises of guaranteed returns. Perhaps the most enduring lesson is the importance of emotional discipline in investing. The frenzy of the Mississippi bubble was driven by greed and fear, two emotions that continue to dominate markets today. Successful investors learn to temper these emotions, focusing instead on long-term goals and rational decision-making. As we close, remember that the story of the Mississippi bubble isn't just a historical curiosity. It's a mirror, reflecting the timeless patterns of human behavior in financial markets. By studying the past, we can navigate the present and secure a better financial future. As we've seen, the Mississippi bubble was more than just a financial disaster, it was a defining moment in history, shaped by innovation, greed, and the pursuit of wealth. But its lessons endure, reminding us of the importance of sound investment principles and the dangers of speculative euphoria. Today, we still see echoes of the Mississippi bubble in modern markets, from dot-com startups in the early 2000s to cryptocurrencies and meme stocks in recent years. These stories remind us that while technology and industries evolve, human behavior often remains the same. So, what can you do to avoid falling into the same traps? Stay informed, focus on value, and remember that sustainable wealth is built over time, not overnight. By learning from the past, you can make smarter financial decisions and build a future that lasts. If you found these insights valuable, don't forget to like this video, subscribe to the channel, and share your thoughts in the comments below. What other financial bubbles should we explore next? Let me know!